You're now tuned in to The Investor Show, where we teach simple wealth creation for the common investors with investment advisor, award-winning author, international speaker, and founder of Royal Financial Investment Group, Prince Dykes.
As always, on a Friday, well, I upload them on Friday. Wherever you're at in the world, whether you're in Japan, London, the UK, wherever you're at, Canada, all my listeners around the world, definitely want to appreciate all of you guys. It's been a crazy week here on the stock market. We'll get into a little bit of that. But as always, if you guys want to check out my YouTube channel, The Investors Channel, head over there to get some cool tutorials, stuff like that. Check out my book, Wesley Learns to Invest, the world's first investment book for children. IABOH, the app. I don't know what else is out there. But anyway, just sit back. I don't know what you guys are probably doing. Maybe you're riding around in your car. Maybe you're listening while you clean up the house. Maybe you're working out. Or maybe you're just walking and cruising or whatever you may be doing. Maybe you may be listening to me on the YouTube channel. But however you reach me out to the world, I definitely appreciate it. And leave me some feedback. Leave a review. Leave a comment. Share all of the good stuff. But it's definitely, as always, I don't have a lot of time. I definitely know you guys don't have a lot of time, so we're going to jump straight into it. So as you guys can see in the title, this talk is about mutual funds, right? So how do you get a mutual fund and how do you end up with these things and what are they, right? So, well, if you don't know what they are, I'm going to bring my son in here. Wesley, go ahead and tell him who you are and tell me what a mutual fund is.
Hi, my name is Wesley, and I make investing easy and fun. What is a mutual fund? They are investment programs funded by shareholders that trades in diversified holdings and is professionally managed. What does that mean? Take this fund manager named Jeff. He takes several individual stocks like Netflix, Facebook, and Google and put them into a bucket and create one fund and call it, the Technology Fund. People who may want to invest into technology but may not know which company to buy can now buy the Technology Fund and now have a piece of all three companies. Some consider this a good investment because your money is diversified, while other says bad because of the fees Jeff the fund manager collects. How do you buy a mutual fund? You can contact a stockbroker or use many available brokers online.
At the time, I was in Connecticut, being in the military on certain submarines, actually. And I was back then they used to call us storekeepers, but now they're called logistics specialists. So there I was, maybe about 2 years into being a logistics specialist. One of my chiefs there was like, hey, you need to get into investing. You're a young man, you're single, you should invest. And I was like, well, how do I do that? How do I make money? Where do I put it? Where do I go? And he said, go to the bank and check out. I'm not going to say the particular bank's name, but just for, I don't want nobody to come at me crazy saying I said something or whatever without their permission. So anyway, so I go to this bank and they're like, okay, cool. We're going to hook you up with one of our financial investment guys and you should be good to go. I get a phone call from the guy. We schedule an appointment. I sit down. They kind of write everything out to me. I ask me a couple of questions. And they say, hey, you're a young man. At that time, I was probably about 21, 22. And they said, hey, you need to get into investing. And, well, they didn't say I needed to, but they said, hey, if you want to get into investing, we advise that you take full advantage of the market. The market's been doing pretty good. Mind you, this is around about 2005 era. I want to say 2005, 2006 era. So, we all know the market crash is getting ready to come around in 2008, looking back on it. So I'm like, oh, okay, well, how do I do? How much is it going to cost? He was like, okay, well, we can start you with a little bit of money here. Just put a little bit of money in every month and boom, you should be good to go. I said, okay, cool. Well, what is this? This is a fund. It's a couple of this and that, and it's going to be, I was like, I don't know what they were talking about. But at that time, I didn't know what they were. That's why I always taught my son Wesley, as much as I can. Even though he may not understand it completely, at least he know what those terms are. So I get into this mutual fund. He signs me up for a growth fund, which is a strategic move. Not a strategic move, but it's just a classic cookie cutter move of, hey, you're a young man, you got money set up, boom, growth fund, mutual fund, here you go, boom, put money into it every month, you're good to go. And I said, okay, cool. So I put money into it every month and didn't pay attention to it. So as time went on, I was already kind of skeptical about the market anyway because my upbringing and my parents had always taught me, hey, stay away from the market. You don't know what you're getting into. You don't know what to expect. So I always was kind of a little weary of the market itself. But what happened was my parents were like, well, not my parents, but I started investing, and now I'm kind of wondering what's going to transpire out of this whole situation. I didn't know what a mutual fund was. So I'm just putting money into it every month, putting money into it every month. I'm not really seeing the growth I expect out of an investment. I kept putting money into it, and next thing you know, around about 2007, 2008 market crash. And I started to see myself putting money into this, but I started to see my money go away. So I was wondering, man, why is my money going away? What's going on? Then I realized I still didn't know what a mutual fund was. I just thought maybe he got a bad investment. Maybe that guy was a bad investment advisor. Maybe he just got me into something bad because everybody's making money except me. I got the wrong thing. So around about 2008, while I was serving in Iraq, I had a little bit more money saved up, and I just said, hey, how about I go to the point of letting me, what I decided to do, I said, hey, you know what, let me go see another. No. While I was in Iraq, I was talking to a guy. Hey, what do you do with your money? And he brought up mutual funds again. So I said, well, I kind of got some mutual funds, but mine are not really growing like that. And he said, well, try my mutual funds. These kind of grow. So I said, okay, cool. So I looked into maybe what's the company? My company was this. I'm not going to say the company name for obvious reasons, but hey, my company was this. Maybe, because you have all type of mutual fund companies out there like Vanguard, Fidelity, and all the other good stuff. So I said, well, maybe because the one that I had, the company, maybe it was a bad company. Let me look into another mutual fund. So I looked into another mutual fund. I get the mutual fund, and I started to realize, it wasn't doing that well itself. And this is around about 2008, right when the market was crashing. So I'm just seeing this mutual fund just dwindling off into whatever. At that time, I didn't really have a very good understanding of investing and investing principles of as the price goes down and you're still putting the same amount in, you're getting more shares. And if you keep putting that amount in, I didn't understand all that principle, dollar cost averaging and getting more shares and lower price. All I saw was my account was going down. So I sit back and I say, well, you know what? That's what my mom's and my dad's upbringing start to ring and say, hey, you know what? They told you never to invest, but you did it anyway. Well, they didn't say never to invest. They said, don't mess with the stock market because you don't know what you're doing. You'll lose your money. And I say, man, they got a good point. I don't know what I'm doing, and I really don't know what's going on. I am losing my money. I feel like a dumb investor. And I started to do my history, and I started to realize that my parents were in their era, because my dad right now today is 70. He's going to turn 71 in a couple months. But in his era, that made perfect sense. They could put money into a savings account and get 3-4% off of a savings account back in those days. And that's a pretty solid investment if you're just putting money into your savings account and you can watch it literally grow with 3-4%. That's why, saving was pretty much preached into, my household. But nowadays, that way of thinking is obsolete because right now, the highest, right? If you're lucky, you get the highest. The highest you have right now of a savings account is 0.25. We live in a very low interest rate society. We live in that low interest rate society because of, the stimulus package that was passed in 2009 to lower interest rates. But I'm not going to jump all off into that. So I sit back and I see people and I say, that's why my parents didn't teach it. So that way of thinking did not pass on to me. So I really didn't understand investing. So guess what I did? I made a dumb decision, I won't say it was dumb. It was just a decision that I made that I will regret. But anyway, and the reason what I did was I pulled my money out of the mutual fund at that particular time. Looking back, I should have just let it stay. But anyway, what I wanted to, the whole purpose of that is just showing you, telling you my story of how I ended up and how I'm introduced into mutual funds, just like a lot of you guys probably are. So, Prince, why you going off the deep end? What is the whole purpose of this? Why? All the good stuff. So, the whole idea is when I started to learn and become educated, and went on to school and got my different investment license and jumped into the market. Because after that, after I got out of that mutual fund, I was wondering, like, that's the only way I knew of investing into the market was a mutual fund. So I started to wonder, what about individual stocks? And I started to learn about individual stocks. Then I started learning about mutual funds, ETF, option trading, Forex, all these different investment vehicles. And that's when I started to learn what was good and what's bad. It's like that old saying goes, in order to know what a good relationship is, you got to experience a bad one. In order to appreciate the sunshine, you got to have rain. In order to really appreciate having something, you got to go without it. Because I would tell you, not to jump off topic, but just give a little quick little metaphor. I just been like sometimes, being in the military and getting off into the different lifestyles, and you would go out on a submarine or something, and it'd be the little things like waking up and just smelling fresh air. You're like, man, I took that for granted. Now, I really appreciate it. Just seeing the water, seeing the sunlight, being able to pick up a phone, those things are taken away from you, And I would say, something like that, going through that, it makes you appreciate the little things that you don't have. Now, Prince, how does that relate to investing? Well, it relates to investing pretty easy because you don't know what is good until you have what's bad, So that's when I started to experience different instruments on the market. Now, when I started to really, as Wesley told you guys in the beginning, as I really started to but started to doing a little research on the market. I don't know how I go from appreciate to research, but anyway, bear with me, But when I started to get into the market, I started to realize how mutual funds were set up. So essentially, you have a fund manager. They say, hey, this is a very risky, I want to make a growth fund. So if you're a young person, they're going to recommend you a growth fund. Most investment advisors are going to say, hey, you're young. You don't know what stocks you want to pick. You don't know what company is good. You don't know what company is bad. So guess what? Get a basket of them. I created a basket and I threw in a couple good companies in here. I got a little McDonald's. I got a little, let's say pick fast food companies. Yum, which is the owner of KFC, Taco Bell, and Pizza Hut. We throw them all in together. When we get all these things in together, we put them in a nice little basket. These are pretty good growth stocks. You pay one price, just like one share. Now your money's diversified. And this is a good way for you to go. Just in case McDonald's goes out of business, you got KFC to back you up. So now you start to feel like, hey, I got some pretty good stuff going on here, right? So what happens is you're not looking at the fees. And the fees, they're not like traditional fees, like, your water bill, light bill, where you pay something every month. But what happens is out of all of that money that is inside of that fund, because I created this basket and I sold it to all these people, all the people pour their money into this fund. Now I'm taking a little bit off the top, which is rightfully so. They have to live as well to maintain this fund. But the thing is, the facts, this is not what I say. This is the facts. If you don't believe me, go to my channel, my YouTube channel, the Investors channel. I have a video on there called I Sold All My Mutual Funds and This Is Why. And I break all the mutual funds down. I just find random mutual funds. And it's pretty proven that 85%, if not higher, I think it's much higher, but 85% of mutual funds don't beat the market, right? And what I mean by the market is the S&P 500. S&P 500, you'll know what that is. That's Standard & Poor 500. Essentially, what it does is just Standard & Poor takes the top 500 companies in America, and it measures them, and it tracks them, and that index is what they call an index. That index is the benchmark of finance. So anything in finance, whether it's a mortgage, whether it's a stock, whether it's a fund, whether it's a hedge fund, anything, people always take it and they measure it against the S&P 500. Because, you hear those things, S&P 500 is up and down and Dow Jones is doing this and this is doing that. The reason why you're hearing that is because those are indexes. And the Dow Jones it only tracks 30 companies. The NASDAQ only tracks 100. S&P 500 tracks, obviously, 500. So which one is going to give you the better picture? Something that's tracking 30, something that's tracking 100, or something that's tracking 500? Something that's tracking 500 because it has a wider variety. So the trick is, not the trick, but when you compare most mutual funds to the S&P 500, majority of them don't beat the S&P, don't even perform or beat the S&P 500 on a consistent basis. Yeah, it may have a month. Yeah, it may have this or that, or whatever the case may be. Most mutual fund managers, most investment advisors don't beat the market. I don't know why my phone is going off, but it is. But anyway, they don't beat the market, right? So with that being said, it's like, well, why am I buying a mutual fund when I know about 90% of them are not going to beat the market? Why not I just get into the market? And it's easy to get into the market. You can go to my YouTube channel, get step-by-step tutorials. But if you're a pretty seasoned investor, you should notice already that you can get index funds and stuff like that. Warren Buffett is pretty big on those. That just tracks the market. Because if you track the market, you're going to beat 80, 90% of investors. You're in the top 10 or 15% by getting with the market instead of a mutual fund. If you don't believe me, pull up your mutual fund on any trading platform. E-Trade, Scottrade, TD Ameritrade, U-Trade, He-Trade, They Trade. They all do the same thing. Well, not technically, but they all have the same premises. You should be able to pull up a chart, look at the performance of your mutual fund, then look at the performance of the market. If that doesn't win, if your mutual fund is not winning, then maybe you should go into the market. Then on top of that, look at the fees. Look at the fees. Pay attention to the fees. Something most people don't pay attention to. Now, the mutual fund industry is probably $1 trillion, easily $1 billion, probably $1 trillion industry. People that just tie their money in one way or the other. So many of them out there. I don't understand why they are around if 85 to 90% of them don't even beat the market. Why do people get into them? But it's just that due to not having the financial literacy that, hey, I can get into something that's probably going to beat this mutual fund and something better. So I don't understand how they're still in the industry. Well, I kind of understand. People just don't know. But how these things are still running rampant is you create a fund, then some people are paying brokers. Some people are paying investment advisors. Companies are creating their own, and they're pushing them to clients. And when clients get them, they don't know any better. Think about it. You really never hear anybody say, man, I got my, thanks to Edward Jones of Fidelity, I made all this money on a common basis. You don't really hear that too much. And why? Why is that? But you have a lot of private fund managers out here that do extremely well that I've seen. So when I sit back and I see it and I look at it and I observe, I don't understand why this industry is a multi-billion dollar industry. I understand because I was part of that same thing. And if you're not aware, if you're not sure, probably somewhere in your IRA or your 401k or your whatever the case you may have with your employer, or if you're self-employed with your own SEP IRA, you probably have a mutual fund in there somewhere. So do a little research and see what it is and look up the performance of that mutual fund and compare it to the S&P 500. You don't know how to do that, just, I don't know, email me. Email me at info@royalfinancials.com. Also, if you want to be a part of my distro, where you get all the episodes emailed to you, my cartoon, Wesley Learns cartoon, where you get my, what else you can get emailed to you? Where I'm going to be live, YouTube, anything that I do and continue to do and grow and evolve to, you'll get that stuff. So, books, all that type of good stuff. But that's the thing about it. Most people just don't know. And that's why I do what I do. That's why I created this podcast. That's why I wrote the book I wrote. That's why I created the YouTube channel I created. That's why I've done everything I've done up to this point, was to, go on live, spoken in so many places that people just don't know. So people don't look at the fees. Most mutual funds will not beat the market, even though we know this. But where can you go if you're going to put money in every month? Where can you go? You might as well get yourself an index. If it's not going to beat the S&P 500. So I don't understand why mutual funds are still around. But if you have some, go look around, go check yourself out. And don't take my word for it. What was that old, I don't know, was it Reading Rainbow or something? Don't take my word for it. Go do something like that. I don't know. But anyway, don't take my word for it. That's the thing I love about finances. Everything is numbers. You can look up anything from anywhere and see its performance, everything. So that's how it's been. But I don't understand why they're around. But anyway, I told you how I ended up into them, and I'll tell you how most people end up into them. And the reason why is most people walk in, they don't know what they want. They're like, well, I don't know. What's a good company? What should I have? And what should I blah, blah. And most clients and most people feel comfortable with getting a bucket of something versus one thing. Because what if McDonald's crash and I put all my money into it? But I have a bucket. This bucket is going to do so good or whatever the case may be. But anyway, that's all I wanted to share with you guys with the mutual funds, and how do they get to where they are, and why do people have them, and a good alternative for them. And that's why I say sometimes the death to the mutual fund, because I'm like, the more people that are educated, the more people that's probably going to should walk away from them. But hey, they've been around for a long time. So, but anyway, I just want to share that with you guys. Anyway, look on some of my old episodes if you want to hear some nice interviews. If you guys see a topic you guys want to see me talk about, don't forget to come back in and check every single Friday to get fresh new content on this podcast. And until the next episode, or if you're watching me on YouTube, anything like that, it's still an episode, whatever the case may be. But until the next one, you guys already know what to do. Peace, be safe, and I'm out.